Welcome back. I know we have business to do, but I'm so distracted by Mike Eppel's backdrop. Hey, Mike, good morning. Happy Friday.
Same to you. Good morning. How are you?
Good, but do your pictures behind you, just above your head, do they light up? Is this what we're looking at?
There's a little bit, you know.
That is fancy, Mike. Whoa.
Adjust this. I don't want to look. I don't want to move
you don't want to mess it up. Okay,
it's just, yeah.
Sorry, I get distracted easily.
I know.
Haven't noticed.
If it's not the cat knocking things over, it's me adjusting the camera. It's just.
Oh, boy.
No, let's not do that.
Okay, we are good, Mike. We have so many numbers to get through for you this morning. Where do you want to begin?
Let's start real estate.
Okay.
Everybody's favorite topic at the water cooler, because the price for homes across the city, Mel, in the latest month, record highs again, according to the Toronto Region Real Estate Board. The average price of a property now in the GTA is $1.16 million, and that is up almost 22% compared to a year ago. You look at the detached market, prices are up 30% year over year, $1.56 million for a detached home. The condo market, which was weak in the depths of the pandemic, it has roared back to life. Condo prices up 18% to $715,000. Again, these are average prices, Melanie. You look at the 905 versus the 416. The 416 bouncing back sharply. The 905 is still very strong. And a couple of things here. Well, what's driving it? Okay, supply shortage. The number of new listings dropped again compared to a year ago. There are just over 10,000 properties up for sale right now. That is way below the historical average. And then you've got people talking about, next year interest rates are going up. Get in now before that happens. Lock in for 5 years. And it just kind of feeds on itself. And there's just no supply coming on. And the market just keeps going up and up and up.
My goodness. Okay, other numbers we're watching, jobs.
Yes, coming up this morning, let's not get ahead of ourselves. No. Time moves too quickly as it is. Anyway, November unemployment statistics. The Canadian jobs data expected to show 40,000 jobs. In the U.S., 550,000. If we see that type of number, you can pretty much bank on an interest rate hike by the U.S. Central Bank next year. The Bank of Canada will likely follow the lead. Of course, the variable is Omicron and everything going on in the the COVID situation right now. But if you look at just the statistics and the data, that is pointing to an improving economy. Big question: are employers still having so much trouble filling vacant jobs that the numbers overall actually underperform because, again, of the labor shortage? So that's something we'll be watching. And, of course, wages. Wages are going to be a key into 2022 because of inflation, and a lot of wages will be going up if they're indexed to the inflation rate, and that's going to be a key price metric as well.
Let's stay with the trend of going up, and that continues with oil prices.
This is a surprise. OPEC announced yesterday they would be raising production by 400,000 barrels starting next month. They had telegraphed this. Of course, the U.S. recently said that they're going to release oil from the Strategic Oil Reserve. The price for oil didn't drop on that. It was more about, well, the latest COVID variant. That cratered the market. But then OPEC says, okay, we're going to raise production, but we remain, as they said, ready to move one way or the other within a day's time on output increases or pulling back. So that had the market kind of on high alert, saying, okay, maybe they've reached a floor here. Oil at around 66 and change per barrel this morning. Price for gas, I think it's $1.32 on average. And you drive around, you can see it for a lot less than that. So we're way off the recent record highs.
Mike, we only have time for one more story. Let's get to Google. Talking about their return to office policy. Now, what are they saying?
Work from home indefinitely. They don't know. And this is, of course, one of the biggest tech companies. And hasn't this been the story of the past year and a half, Melanie? We get companies saying, okay, it's time to come back. No, it's not. No, it's not. Come back to the up. No, a new variable, a variant. And now Google's just saying they don't know. So just keep on keeping on and work from home. And that seems to be working pretty well. And I think you're going to hear a lot more about this from several other companies who are going to delay the return to the office. And of course, that, you look at the downtown cores. We've talked about this before, the path system under the city, and any, ecosystem that relies on those big office towers being filled. This is just another problem and worry going forward here.
Okay, Mike, we are almost
sorry to leave on such a,
I know.
I leave on a down note. I'm sorry.
Leave us with one happy thing. What's happy going on this weekend for you?
Oh, gosh, what's going on this weekend? That's a good question. You're stumping me, Melanie. It's so on Friday morning. I'm just trying to get through the day.
Okay, you get through the day.